There is no interest. In 2011, somebody took it down. Morning, people watching. Bitcoin is very peaceful.
Good morning, good evening, good afternoon. Real. Bitcoin's here to stay, and you need to be a part of it.
So I noticed there's only a few people here today, right? Because a lot of people saw the prices go down, right, on Bitcoin and wondering, oh my God, this is all scam. I'm going to leave this thing alone, right? Bitcoin's going down. It's all lies. We're supposed to be at the moon by now, and I know, right? And a lot of people are saying, wondering why, and I'm not surprised actually, because a long time ago, the Federal Reserve, right, had to raise interest rates up to 30%, right? And because they were trying to fight inflation back in the 70s and the 80s, since the 80s. And this was a big problem because the government had to borrow at 30% interest rates for 30 years. That's a lot of money. And one of the things the Federal Reserve Chairman said was, hey, you know what? My job would have been a lot easier if we had managed gold. And so from that point on, right, they started managing gold. There's a lot of evidence that they were managing gold's price, and then if you wrote about it, you said, hey, wait a minute, these guys are keeping the price of gold down, people would call you crazy for quite some time. In fact, I was writing on many articles that were saying, all those crazy people who were thinking gold's managed, man, they're so completely wrong. Those articles are now gone because now there's plenty of evidence that that's true. No one denies the fact right now. No one writes an article denying the fact that the Federal Reserve is managing gold. Now, what are the odds of them managing Bitcoin? Well, very high. I don't have any evidence of that, but it's very high because if I were to try to manage Bitcoin, one of the things I do is create this, we call it a commodity, put it in the commodities exchange, and also tell you on the commodities exchange, hey, you can't actually receive Bitcoin. And Bitcoin is the only commodity on the commodities exchange that you cannot receive the actual commodity. You can buy and sell contracts promising you to pay Bitcoin, but you will not get the Bitcoin. You'll only get dollars. What is that? What is that? That's nothing. If you can't get the Bitcoins, well, you've got nothing. All you've got is a promise to pay you in dollars based on the current price. You're not going to affect the price of Bitcoin when you purchase a contract on the commodity exchange. Right? So you're like, what's the use of that? Well, it's actually useful for mining to hedge against, price fluctuations and so forth, right? Because they're based on a dollar standard. They're looking to get more dollars, not more Bitcoin. They care about dollars because if you were to get into mining, and I don't suggest anybody get into mining, here's why. If you were to spend the same amount that you would spend on mining, right, than you would on buying Bitcoins, you would not receive the same amount of Bitcoins at the end of your mining contract. It's not possible. Why is that? Because more and more people are mining. Today, the hash rate is at its all-time high. So when you buy your mining equipment, right, you're thinking, okay, well, my ROI, you're basing it on the current hash rate. So my ROI, should get my money back or my Bitcoin back by a certain time. And you're saying you're doing an estimate by the current hash rate, but you're forgetting, as the hash rate goes higher, you're going to get less and less Bitcoins. In fact, I used to mine Bitcoins. I mined Bitcoins back in 2011, right? When I maxed out the maximum I could possibly buy. I decided, listen, I'm gonna mine. I created my own mining farm inside my house. After that, I created my own mining pool, and I started buying ASICs, the current machines that are today that are doing the mining. And what I found was the lead time between purchasing the equipment, then getting it, then setting it up, right, took about anywhere from 3 to 6 months. So you've spent that money, right? The hash rate's still going up, and by the time you get the equipment and you set it up and you start it, you're at a loss Bitcoin wise. Now, even though I remember getting the my ASICs back in 2013. I was making about at the high about 25 Bitcoins in 2013 per day, but it wasn't enough to offset how many Bitcoins I'd spent. I was still making a lot of money, but I wasn't going to get the same amount of Bitcoins I'd spent, right, in the past. And so that's a key thing why I don't suggest people mine Bitcoins, right? Because you just buy it and you'll get more. Okay, so my point is, right, the what's it called? Commodities exchange is just used to do mining, help miners offset their costs, right? So because they probably borrowed in dollars. That's the best way to do it. If you're going to mine, basically the best way to do is to borrow the money, cash money, and then mine with that cash, and then save the Bitcoins. Maybe use the commodities exchange to help ensure that you get the amount of cash you expect to get. Right, is one way to do it, and so that you can pay your debts. That's the best way to do it, and it's a little bit complicated, and that's why I don't recommend it for the average person. So using the commodities exchange, preventing people from actually getting Bitcoins or even participating in using real Bitcoins, that helps suppress the price. Another way to suppress the price is this ETF. The ETF that just came out in the United States is not a real ETF. It's an ETF that's backed up by the commodities exchange. Right? So now, all of a sudden, institutions can buy Bitcoin because institutions such as that are retirement funds cannot purchase commodities. It's against the rules, right, for any retirement fund to purchase directly a commodity on the commodities exchange or directly. So the only way they can do that is through an ETF. And so now, all those billions, even trillions of dollars that can go into Bitcoin, they're going into this ETF. The ETF that's backed up by dollars, promises to pay dollars. And so it's only a bet on the real price on Bitcoin. It's not a bet, it's not actually taking possession of Bitcoin. So you can see how this is actually managing the price of Bitcoin, because the real money that should be going into Bitcoin is not. So this is why we're here today, right? Because now a lot of corporations, they're like, okay, I want to get into Bitcoin, right? I don't want to hold it, and I don't want to manage the custodial of it, right? So I'll just buy the ETF. Yeah, the Federal Reserve says, yeah, go right ahead, right? Because that means prices don't go up because you're not participating in taking off real Bitcoins. This is an advantage for all of us, right? Because we could actually buy the Bitcoins at a lower price and take possession of it. Because we all know there's limited number of Bitcoins, 21 million. So we could start accumulating at lower prices thanks to the Federal Reserve. Because this is not going to end well for the Fed. They know this. But what they do know is that as long as prices tell people what to do, because prices are mostly an indicator for everybody, because most people don't look into what's really going on. They don't have time for that. Who's got time for that? Ain't nobody got time for that. So they just look at prices. They go, okay, well, price will tell me everything. They don't have time to study and analyze what's really true, what's really going on. They just look at prices. They say, oh, well, price tells me all I need to know. Right? So effectively, by managing price, you manage the asset, manipulate the price down. You manage the asset so nobody comes and goes, okay, oh, wait a second, that price is going up, like gold or silver. That means that's the canary in the coal mine. That means inflation's here. So I know that's my signal, right? You don't look at anything else. You just look at price as your signal, because you're too busy with your day job. You're too busy with the company. You're only going to look at price to indicate, hey, something's wrong with inflation. So that's why the Fed has to manage Bitcoin at this point, because if Bitcoin goes up and goes crazy, everybody's going to go, okay, what's going on over there? And everyone who in the space, they talk about how poorly managed the Fed has done, the Federal Reserve has done with the money supply. They're constantly increasing the money supply. In fact, I was talking back here in this cafe of saying, hey, you know what, they're increasing the money supply by 25% year over year. And now you can actually see it. If you go to any dollar store in the United States, it's no longer $1, it's $1.25. So it's 25%. Wait until it's $2.50. That is what I classify for me, right? Because there's no real classification for hyperinflation. But I think year-over-year price of 50% is the definition of beginning of hyperinflation. And I think because the reason why you don't want things to go up by 100%. Are you kidding? You don't want to pay 100% more on your food in 1 year. That means your wealth, if you have any savings in dollars, right? Your wealth has dropped 50% in 1 year. Think about that. In 1 year. That's amazing. That's you've lost half your money. That's incredible. So nobody wants to lose 50% of their money in 1 year. Would you like to lose 50% of your money in 1 year? Heck, you wouldn't even want to lose 10% of your money in 1 year. So yeah, 50% is is massive. And so I think that's the classical definition of hyperinflation. But most people wait for larger percentage to say that it's hyperinflation. For example, in Turkey, right, they've lost, I think it was a 38% this month. 38% last month actually. 38% drop, right, in the Turkish lira, and they're still not calling it hyperinflation. 38%. Imagine that, losing 38% in a short amount of time. That's incredible. And so now, it's best for a Turkish person to actually start dollar cost averaging because it's not going to end. Do you think the government is going to stop printing? If you, as a person, individual, had the ability to borrow money non-stop until somebody tells you that you're done, they cut you off, and you realize, okay, so you lost your job, but you can still borrow some more money. So would you do it? You'd probably accept that because you didn't want to lose your standard of living, right? You would say, okay, you know what, I'm just going to borrow money. Everything will be okay. I'll just, I'll find another job. Things will be okay. That's what a normal human reaction to do, especially if you have access to borrow money. It's not the right thing to do. Not at all. The right thing to do is, cut your expenses, find a way to increase your income. Either find another job or take a lower paying job, right? And reduce your expenses and wait until things get better. But if you have access to borrow money as much as you want, yeah, you know what? I'll just borrow some more money, and you know what? Things will work out. Right? You'll do that. That's a natural reaction. Well, the same with governments, right? Well, I have this printing press here, which is effectively borrow money, right? We'll just put some money and just wait for it to work out, right? And so that's what governments do. They're just reacting like natural human beings would react. They're like, okay, we'll just print some more money and things will work out. Don't worry, we'll work it out. Things will get better, right? We'll have more money in the economy, and then we'll stop borrowing money. But that doesn't happen. When you have access to borrow money, you get complacent. You go, okay, well, you know what? I borrowed a bunch of money, but I could borrow some more, so I'll do that, and I don't have to find another job. I don't have to increase my income. I made a mistake, and I should have gotten some more job. But hey, I could borrow some more money. And you're going to continue to do that until the day the bank cuts you off. Then what you going to do? Well, how does a bank? Since the government doesn't have a bank, what cuts off the government? Well, hyperinflation, right? The end of the money supply. The money becomes worthless. That cuts off the government. And we're approaching that very fast. And then, of course, the government needs to protect themselves from people actually dumping the cash, right? So the best way for them to do it is to manage anything that will indicate to you, the individuals, that the cash value is dropping fast. And so, whilst you could say Bitcoin's going down, it should be at 100K, it should be at the moon. We have to step back and look at where Bitcoin was a year ago and where it is today. A year ago, it was under $30,000. Today, it's over $40,000. It's still a significant increase year over year. But of course, you don't care about that. You care about the here and now. You want Bitcoin at $1 million, and you know what? We can't push Bitcoin's price, right? Because this is all up to individuals making their own rational decisions, right, based on the information they have, right? And the information they have is that, hey, you know what? All I know is that the price is not going up, so I'm going to sell. Because they're not aware of, hey, well, what's the value of Bitcoin? What's the value proposition? Why it will actually continue to exist and continue to go up in value. And the reason why is because it is a decentralized currency. There is no person to go to say, no, I don't like how that works. You're going to change it, right? So, like a central bank, right? They have a set of rules, and if things are not working out, the government goes, things are not working out. You have to change the rules, and they do, right? Whilst Bitcoin, if things are not working out, it's like physics. If you don't like gravity, right? You can't go, hey, gravity, you know what? That's not working out. Like, I got to change the gravitational constant. Right? Because it's making a big problem for me because I'm falling from the sky here. I'm going to hit the ground. Right? So we need to change the gravitational constant so I don't die. No, sorry, bud. Right? You jumped out of the plane. You shouldn't have done that. You're not changing the gravitational constant. So long as men can't change the rules, you know that it's going to be solid. You know that there's no way that it's going to change, and this is the main thing about Bitcoin. Now, of course, it's not impossible for Bitcoin's rules to change. It's not impossible. It's close to impossible as possible we can make it, right? Because of course there is the case, right, that somehow everybody agrees on the planet, or even because the way Bitcoin's designed, that even if 50% of the people decided, you know what, we need to change Bitcoin, it wouldn't matter, because Bitcoin could remain the same, even with 50% or 51% consensus saying, no, we need to change it. Why is that? Because all you'll do is just fork out Bitcoin, because you'll have one Bitcoin that's everybody wants to increase the number of, and then the other Bitcoin that stays the same. And the people who are smart and intelligent, they'll stay on the one that's remains the same, and that would be the majority. It doesn't matter if it's a majority of people, and even if it's like just 20%, it still doesn't matter, because those people will actually increase their value against the one that's always changing. This is what gives Bitcoin its strength. This is what gives Bitcoin its power, because you're never going to get 100% agreement ever. Hey, we should change this, and that's what's needed. 100% agreement across everybody. So since that's never going to happen, this is close to impossible as possible we can get. You can say, yeah, it's possible we get 100%, but I doubt it, right? You can't even get 99% to agree on. You can't get people to agree on anything in a room, right? Like on any kind of topic. This is why we have separate governments, separate, right, states, because people don't agree on certain things, and there's nothing wrong with that, right? There's always because the reason why is because we're all trying different things. We're all trying to see what works, what doesn't, right? And you could decide. It's best if we have as individuals the right to decide which is right, which is wrong, and then whoever wins is right, basically. Like reality rewards the person who is right. Because I always say this because people would argue with me against gold, silver, and Bitcoin, right? And I said, listen, let's not argue. I'm going to buy Bitcoin and I'm going to buy gold and silver, and let's let reality see who's right. Because reality will reward. So the reality, because you know what? If you jump out of a plane, right, and you go, no, I'm going to be fine without a parachute, and I say, yeah, you shouldn't do that, right? If you believe, right, that you're going to be fine, right, your belief's not going to help you. The reality will, at the end, will tell you, no, you're not going to be fine. So, with that said, this is where we are right today, is that with Bitcoin, the reality is that Bitcoin is being managed, and I can clearly see that. I don't have direct evidence of it, but with all the current systems that are in place right now, for example, another system that's in place right now is that you could borrow against your Bitcoin, right? And you're like, okay, great, you can borrow against your Bitcoin. Well, what happens is when you borrow against your Bitcoin and they're managing the price, they know that, hey, let's just say you did a borrow against, you did 50% leverage, right? You think you're safe. You bought it at 60,000. The price is never going to go down to 30,000. Well, now they have a target to push the price down to liquidate you to sell even more Bitcoins. So this is another way for them to actually push the price down. Also, another option that they have, right, is with these places where you deposit your Bitcoin and gain interest. Because when you gain interest, you're thinking, okay, well, this is how you live, right? Generally, people go, okay, well, if I just stick it there, I could live off the interest and I'll make some money. Because everybody on this current financial system, this is how they believe in order to get their wealth, increase their wealth, is because, hey, you know what? I just want to live off my wealth and I just get this small interest rate, and yeah, that's fine. But one, you're taking a risk, right? That company's not going to go under, and two, whatever they're doing, right? Because they're actually lending it to someone, just they don't lose their wealth, where they don't go, oh shoot, we screwed up and lose everything. And so you're taking that risk. But what's happening now is that the Federal Reserve and the bank and the government can now go, you know what? We could take those Bitcoins that you have deposited there and sell them in the market. We'll give you a guarantee that, hey, if we don't come back with the Bitcoins, just give you the cash. Because we got printing press. So this is another way for them to manipulate and manage the price. That's how I'd do it if I was the government. I'd be like, okay. I wouldn't go directly, obviously. You get companies and incentivize people to actually do that. You don't want to do it yourself. Incentivize others to borrow those Bitcoins and sell them into the market. I don't have evidence of that, but this is how I would do it if I wanted to manage the price. Okay? I haven't looked into it. I can give you evidence on gold manipulation and silver manipulation, but I can't give you any direct evidence on Bitcoin manipulation. But I'm just speculating how the government will do so, or the banking system. All right, so what do we do? Well, there's nothing much we can do except, dollar cost average, right? It will come to an end because nothing can be manipulated forever. Eventually, right, price will prevail against all of the manipulation, especially if you take your Bitcoins, take possession of your Bitcoins. I own the majority of my Bitcoins and cryptocurrencies directly. I don't have them on, for example, BlockFi, right? BlockFi pays decent interest, 7%, right? I don't have them on any of those companies that allow you to earn interest on. Also, I did start borrowing against some of my Bitcoin because I realized I was thinking, that is good advantage. I was like, because instead of spending the money in the Bitcoins right now, I could leverage it up. And I realized afterwards, my error, as Bitcoin was starting to come down, I started researching, hey, what's going on? And I realized, hello, look what they've done. They've managed the price very well. And so now I'm stopping the borrowing against my Bitcoin, because I'm helping them find ways to actually manage the price down. So I'm accumulating and holding directly, and no longer allowing anyone to hold my cryptocurrencies. And I have to be very, very careful with exchanges. As time goes on, you can see the exchanges where most people store their Bitcoins, the amount of Bitcoins on the exchanges are being reduced slowly and slowly. In fact, Binance has got reduced amount of Bitcoins on the exchange more than since I think it was 2017 when the first year they started. That's incredible. So, and I've noticed a few of my friends and myself, they're making it difficult and more difficult for you to take your Bitcoins out. That's a sign that something's wrong, and they've probably been forced to borrow or lend out those Bitcoins to the banking system. And I'm sure they've got some sort of contract saying, hey, don't worry, if we don't get the Bitcoins, we'll get you the cash. You gotta predict this. Okay? So you gotta be careful, because if that happens, if that day comes, and it will come, where the US dollar collapses and the currencies collapse, and you think you've got Bitcoins and you've got it on an exchange or something, no, you've only got the cash equivalent. You don't have the Bitcoins. And when that happens in history, we've seen what happens in history. They'll pay you out the cash at the current price, the low price, and then reset the price higher. That's happened over and over and over. An example of that is when the United States called in all the gold. They said, hey, listen, we're going to pay you, gold was $20 an ounce back in 1933. And they told people, hey, we're going to pay you $20.68, which is huge for back then. So people sent in the gold and happily got their extra 68 cents. And then after all the gold was collected, they repriced it to $35. So everybody lost 70% of their value immediately with their dollars immediately. And expect that to happen, right? If you are trapped inside their system. So be careful.